You ever open an app like Robinhood and just wonder, how does this actually work? Especially with millions of people using it all at once. Well, today we're going to pull back the curtain. We're diving deep into a system design breakdown from an ex-Google engineer on how you'd build a beast like this from scratch.
All right, so here's the game plan. First, we've got to wrap our heads around the sheer size of this problem. Then, we'll look at the super smart three-part solution. We'll break down each layer, the exchange, the user, and the routing layer, and then finally, we'll see the whole thing come together in the final blueprint. Let's get into it. Okay, first things first. Before you even think about code, you have to understand the scale we're dealing with. And trust me, it's mind-blowing. We're not just building some social media app here. This is a financial monster. Right off the bat, we're talking about a system that needs to handle 100 million active users. Just think about that number for a second. That's an insane amount of people all connected, all making requests at the same time. And, it gets even crazier because it's not just about the users. Let's say each user is keeping an eye on, I don't know, 100 stocks. Well, you do the math, suddenly the system is juggling 10 billion different data points every single second. So here's the real heart of the problem. It's not just about remembering what stocks you own. That's kind of the easy part. The real challenge is delivering the one true, accurate stock price for every single stock to every single user in real time, instantly. That's the whole ballgame. So how do you even begin to tackle something this huge? Well, the approach here is just brilliant in its simplicity. Instead of trying to build one giant, monolithic thing, you break it down. You slice the problem into three totally separate, manageable layers. You've got your exchange layer. Think of this as the part that's just getting blasted with raw data from the stock markets. Then there's the user layer, which is what your phone is actually talking to. And in the middle, you have this critical piece called the routing layer, which is like the traffic cop connecting the other two. And look, this isn't just for neatness. This is the way to build big systems. It means you can beef up one part, like adding more servers for users, without having to rewrite or mess with anything else. That kind of flexibility is everything when you're this big. All right, let's start at the source, the exchange layer. Its entire job is to deal with absolute chaos. It's taking in a flood of data from all these different stock exchanges, and somehow, some way, it has to find the one true price. See, here's something you might not know. An exchange doesn't just hand you a single price like Apple is $150. Nope. It keeps you what's called an order book. And it's basically this wild, constantly changing list of what everyone is willing to buy a stock for, that's the bid, and what everyone is willing to sell it for, that's the offer. So our system has to look at all these messy order books from all the different exchanges and do some serious number crunching to figure out something called the NBBO. That stands for National Best Bid and Offer. And that, right there, is the single best price in the entire market that we need to show our users. So the question becomes, how on earth do you do that? How do you find that one golden price instantly when you're getting hammered with new data every single millisecond from dozens of places at once? This little table here really shows you what's going on. Look at this. You've got 3 different exchanges, and they all have slightly different prices for Apple stock. So to find that MBBO, the system's got to scan everything and find the absolute highest price someone is willing to buy for, that's the $82.01, and the absolute lowest price someone is willing to sell for, the $82.04. That's the true market spread. So how do you do this fast? Well, the solution is a really slick combination of data structures. You use what's called a doubly linked list, and you pair it up with a hash map. Basically, one keeps all the prices perfectly sorted from highest to lowest, so finding the best is easy. The other acts like a super fast address book, so you can jump directly to a specific price and update it in an instant. And that combo is the key. It's what makes it all work. When a new price comes in, the system doesn't have to waste time searching. It uses the hash map to go zap right to the old price, pulls it out, and then the linked list lets it slide the new price into the perfect spot, super quick. For the tech folks out there, this means O1 removal and O log n insertion, which just means it's insanely fast. And it has to be. Okay, so we've solved one massive problem. We can figure out the correct price, like instantly. But that's only half the battle, right? What good is that if we can't actually get that price to all 100 million phones without, draining everyone's battery in 5 minutes? And this is a real problem. Think about it. If you're following 100 stocks, you can't have your phone open 100 different connections to our servers. That would just obliterate your battery and eat up all your data. It's a total non-starter. So the solution is actually really elegant. Instead of 100 connections, you use just one. It's called a WebSocket, and it's basically a persistent, open line of communication between the phone and the server. All the updates for all your stocks just flow through that one single pipe. It's super efficient.
But, okay, you might be thinking, what if that one server your phone is connected to just dies, right? You can't have the app just freeze up. That would be terrible.
Yeah, they thought of that. The system is built to be fault-tolerant. The server is constantly sending these little heartbeat pings to the phone. If the phone suddenly stops hearing those pings, it knows something's wrong and immediately tries to reconnect. And when it does, a load balancer in the background automatically points it to a new, healthy server. The user, they probably won't even notice a thing. Okay, on to the final piece of our 3-layer cake, the routing layer. This thing is the nervous system of the whole operation. It's the connective tissue. Its one and only job is to take the finished prices from the exchange layer and get them over to the user layer as fast as humanly possible. Now, for this job, there are a couple of big choices for the technology. You've got Kafka and you've got Redis. The way to think about it is this. Kafka is like a court stenographer. It writes down everything that happens in order and never forgets. It's amazing for record keeping. Redis, though, Redis is more like a whiteboard. It only ever shows you the absolute latest information. As soon as a new price comes in, the old one is just gone. It's all about what's happening right now, and it is screamingly fast. And this quote from the engineer who designed this really just nails it. When you're looking at a stock price, who cares what it was a second ago? That data is ancient history. You only care about the most recent data point. That's why Redis is the perfect tool for this job. It's all about speed and recency. All right. So we've seen all the pieces. We've seen the exchange layer, the user layer, and the routing layer. Now let's put it all together. Let's trace the entire journey of a single stock price update, from the market all the way to your eyeballs. So check this out. It starts with the stock exchanges sending a fire hose of data to our publisher nodes. Those publishers do their super fast math to calculate the true NBBO price. Then they write that new price into our Redis cache, that big whiteboard we talked about. Instantly, all the user layer servers that are watching that cache see the new price, and then they immediately push it down that single WebSocket connection straight to your phone. It's an incredible, high-speed chain reaction. So there you have it, a design that can flawlessly deliver prices to millions and millions of people in real time. But of course, solving one problem just reveals the next one, doesn't it? Because displaying the price is one thing, but what happens when you actually hit buy? Well, that's a whole other can of worms. We're talking trade execution, managing money, and a level of financial accuracy that has to be absolutely perfect. And that is a story for another day.